Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, July 31st, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Daily Market Insight video. Market state, we're in a correction. Took a step closer to uptrend today. We'll talk about that as we get through the video, but you can see over here on the trend gauge, biggest problem with this bounce today is a convincing lack of setups in potential leading stocks. So we're still on the red arrow there. One big positive, the S&P 500 regained not only its 21-day moving average, but also its 50-day moving average. So we need multiple closes above there to get the trend off of bearish. It'll go at least neutral if the NASDAQ 100 stays below this level. Small and mid cap still solidly above the 21. Medium term, the NASDAQ 100, the sole index remaining below that intermediate 50-day moving average. Long term, all five of the major indexes above their 200-day moving averages. And as you know, we say the market never gets into serious trouble unless we start to break below that level. We haven't gotten close to that level, and big bounce up today, seemingly out of the blue, but really it was kind of odd. It was mostly because of earnings reports by AMD and by Meta, where they indicated the demand for data center hardware and software and investments, CapEx investments into there was alive and well. There'd been a complete breakdown in the AI hardware data center names on fear that there was not going to be a way to monetize this. The initial hard reaction down yesterday to Microsoft's earnings indicated that that might have been a legitimate worry, but they indicated they were upping CapEx during the conference call today. Meta raised the lower end of their CapEx. They're up after earnings a bit, and that resulted in a big bounce from some broken down former leaders. We'll see if they can get some traction, start forming some decent bases, and bring themselves back into the quest for leadership. And of course, we'll be focusing on the names that held up the best during this pullback period. So what happened today? Big bounce led by big tech based on the aforementioned CapEx and outlook by AMD. Ironically, AMD bouncing initially gapped up quite a bit, gave most of it back, still ended positive by 4%, but it was rejected by some overhead resistance. And then, of course, we had the FOMC, no rate cut, but Jerome Powell basically, I saw one analyst term it as he's teed the ball up. Now all we've got to do is swing. And he kind of indicated that the scenario was set unless something drastically happens for a rate cut in September. We had some serious volatility after that, up, down, up, down. We'll take a look at the intraday charts to decipher what's going on there. But more importantly, it's the 2 days after the Thursday and Friday reaction to the initial Wednesday move, but when analysts and people that make investment decisions get to decipher the statement, how it impacts their investment outlook, and how they position going forward. Then also we've got Amazon and Apple earnings after the close on Thursday, though that will introduce more volatility, and the jobs report Friday before the open. That's the government jobs report. The ADP report today indicated additional weakness in the labor market, and that's something that the Fed does want to see, because that will take the foot off of the inflation accelerator and lead them to have more confidence in cutting rates. So here are the final numbers today. The 21 over 21 list, 13 up, 3 neutral, 5 down, up an average of 1%. The big 8, this is where the money came from today, and the money flowed to today, up an average of 3.08%, led by NVIDIA after an ugly shakeout on NVIDIA yesterday. A big move up 12.8%. Even and it was confidence from the not only the AMD call, but also that Microsoft spent additional spending. But then there was more China, uh, the government saying there's the likelihood that they will relax some of the China restrictions that they've been talking about, and that pumped the whole semiconductor index was up today by 6.7%. That pumped NVIDIA and a bunch of the semiconductor equipment companies. And that, as a result, up 3.1% for the big eight. The RG8, our eight growth ETF composite, an average of 1.2%. To the downside, though, FFTY, this is really the one we want to see leading because this is IBD 50 stocks, growth stocks, and it was only up by 0.11%. So a bit of a fly in the ointment there. Led by big tech, the S&P 500 up 1.6%. The XLK up 4.2%. That's the biggest sector within the S&P, and its two biggest holdings by far are freezing here. It's Nvidia, and I know it's not Apple. There's some weird rebalancing that took place. Okay, it's Microsoft and it's Nvidia. Apple, and those have about a 12% weighting, but Apple only has about a 5% weighting. So uh, they had some weird rules in the rebalancing, and although those three names are very close in market cap, their weights in the XLK are way off. So some strangeness there. Anyway, 1.6% on the S&P 500. Equal weight, however, which had been leading, lagged today. It was up 0.5%. NASDAQ 100 up 3%. Equal weight up a little less, a little more than half that. That excuse me, Dow Jones Industrial Average up 1/3%. Mid caps up 0.6. Russell 2000 small caps up just 0.5%. Was up 2% at one point. An Eiffel Tower look, maybe in honor of the Olympics, during a 1 hour post FOMC decision chart. Big breakout that promptly came right back to the pivot. 60/40 stock and bond, global 60/40 stock and bond up 1.16%. Our flagship GROTECTION portfolio up 0.71%. Let's get to it. We'll start off with the S&P 500. You can see the gap up and the low held. The overlapping 8 and 21-day moving averages closed a little less than half of the daily range, but that excludes the gap. But here, looking at the 5-minute chart, so gap up, made higher highs, tight action into the FOMC, a little bit of a fade right before FOMC, and then the initial shakedown, and then a move to the upside, and then a prompt hard reversal to the downside, another weaker bounce up, another sell-off, typical post-FOMC volatility. And we'll see what the rest of the week brings for this, as well as the Apple and Amazon earnings after hours on Thursday. So see what repositioning takes place. But for now, one of the keys for tomorrow is whether we can maintain this 5,500 level. Acted as resistance on the way up, acted as support during the pullback on 719, acted as resistance over the last 5 days after breaking below the 21. But we got back above it today, and that's a level that bulls definitely want to see hold. NASDAQ 100 has been the weakest for 4 weeks. The strongest today, back above the 8, but right into the declining 21-day and the flattening 50-day moving average. So this is the next level that the bulls need to get through. Apple and Amazon will probably make the decision one way or the other for this index tomorrow. You normally don't see severe underperformance like for an extended period of time. So it's possible that the final shakeout yesterday in this chart took place during the action yesterday, and then the after hours gap and follow through during the session today. We want to see if that holds, and today's low will be the key level to indicate whether or not that happens. I think I'm getting a cold. Dow Jones Industrial Average closed in the lower part of its range, reversed again, challenged all-time highs, but then reversed, still above the 8-day moving average. Mid caps, let's go to the S&P 400, and did make a higher high, but then reversed. Note the relative strength has been there, but here's what I really want to take a look at. The Russell 2000 made a higher high, reversed at this 2300 level. Look, here's the Eiffel Tower that I was talking about. From 230, 240 broke out above this 2269. You see the resistance level over here 3 days ago as well. Broke clean through it. We added on a break to our UWM position on a break above this level, and it ran right up into 2300, then reversed, went sideways for a bit, and actually closed below the FOMC pivot. Not good to see here, but sometimes it's very common to revisit a pivot after a shake. You can see on the daily, this was a nice tight consolidation that we've been having with the 8-day moving average containing the bottom of it. Broke above it, but couldn't hold it. So the big thing that we want to be concerned about is that we don't turn into a from failed moves comes fast moves, and a break of the 8 EMA would be a sign of that happening. So that's one of the things we'll be looking for tomorrow. Let's quickly check the equal weighted indexes. Here's RSP, made higher highs before reversing also, and QQEW, which we know had a failed breakout. And then a pullback below the 21 and the 50-day moving average, also at the intersection of the 21 and 50-day moving average. Did poke it above, but could not stay above today. All right, those are the major indexes. Let's go to the VIX. VIX down 7.5%, briefly undercutting the 16 level, but closing back above it. US dollar, yet some yen strength on intervention. Strong yen will mean weak dollar. Dollar down 0.5%, breaking down below. This looks like a false breakout now for the dollar above this 2-week-ish consolidation level when we ran into the declining 50-day and 21-day moving averages. So back below the bottom of that 2-week range. Dollar down, precious metals up, yes or no? Yes, we did today. Gap up on gold, closed at the top of the range. This accelerated higher after the FOMC, up 1.8%. Gold stocks, gap up, top of the range, close, breaking a downtrend line, up 2.65%. And silver, the weakest of the three, gapped up back above the 8, still below the 21 and the 50. Bitcoin faded after the FOMC. You can see the 5-minute chart here. Really didn't break out the way the other indexes didn't break higher, and now made a lower low. So this is an outside day, higher high and lower low versus yesterday. That's not what we want to see out of Bitcoin, sitting on the 50-day moving average, the 21-day right below that level. Bitcoin on to bonds now. Broad bond index BND breaking out. So you know if the price is breaking out, that the yield must be breaking down. Here's TLT first, the long bond, not quite breaking out, but at the top of its of the range and threatening a breakout. Here's the TYX yield at the bottom of the range, and the TNX 10-year breaking below the recent range. So lower yields on the 10-year. Let's look at the 5-year very quickly. And you can see that making lower lows as well. So yields coming down on the shorter term, not quite breaking down on the upper part of the yield curve, the 30-year. That's our inter-asset correlation. Let's go to the tail of the tape. Excuse me. FOMC up, down, up, down. I showed that. Meta up after hours. Few percent, nothing major, right? Running into 500 resistance. Amazon and Apple tomorrow, NFP report on Friday, as mentioned. So the keys coming into today, S&P versus the 50-day. Yes, higher, not only broke above the 50-day, but also the 21-day. Continued relative weakness on the Qs. No, it broke above the 8-day moving average and showed relative strength today. Mid caps, small caps, equal weight. These have been outperforming lately, but not today. Higher on the day, but lower from a relative strength standpoint. FOMC, usual volatility. Meta, up after earnings. Day count, after a big down day and then a 5-day consolidation, we broke to the highs relative to that. So day count goes to up one. First day back above the 8-day moving average. First day back above the 21-day moving average. Expectations neutral with the mixed tape on S&P and the NASDAQ 100, but definitely leaning more toward being bullish if we can hold on the S&P tomorrow. Today, intraday action, post FOMC volatility. And as far as sectors go, to the upside, semiconductors, big time. Also tech, gold, and silver stocks, and crude oil. Crude stocks not as strong as crude oil. And this is more saber rattling going on between Israel and Iran. To the downside, banks, home builders, and 3 defensive sectors, XLV, that's real estate, Staples Real Estate, and healthcare. The only trade we made in-house was to add to UWM on that breakout. Still focused on ETFs, not on individual names because there's a lack of leaders, plain and simple. And we're got our eye out for them. There are a few that are, top 5-ish. We're waiting for some of this uncertainty and volatility from this week to go away. The keys on Wednesday. S&P against its 50 and 21 day. Will they flip to support from resistance? NASDAQ versus its 21 and 50 day still overhead. Can it conquer that? And small mid cap and equal weight is the relative strength starting to wane on there. We'll keep an eye on that. But the bottom line for the day, big bounce led by big tech. More specifically, AI data center names within big tech, and then the usual post FOMC volatility. We'll see what tomorrow brings. Let's take a look at, first of all, NVIDIA. This, this has been a tough hold lately. What we had been doing is hedging most of it. Yesterday, when we broke below the lows of that apparent shakeout day, we sold the hedge. Basically, it was 1-to-1. If the hedge went up, the hold would go down, and we were waiting for this to reestablish some leadership if it was going to. You can see a downtrend line here. It's right into the downtrend line, which also corresponds with the 21 and 50-day moving averages. Up another 2% after hours. So could be a bunch of people piled into the short side in this, and now this is going to squeeze higher. We will be involved in if it gets back above these moving averages, because everything that's indicated by the data center build out is that the need for the NVIDIA chips are still going to be there. We're also watching the relative strength line against the 21-day moving average of the relative strength line. So what always darkest before the dawn, 2 shakeouts looking like may have gotten rid of all the sellers here, still a month away from earnings. So setting up for a relative low risk entry on NVIDIA. Microsoft. Now, this is really the stock yesterday that still finished down on the day, but did say some good things from an AI data center standpoint, just that their Azure guide, or they missed a bit on their Azure. That's their data center cloud business, and can't get back above the 8-day moving average. So that's something we are keeping a lookout on. Earnings decreasing over the last 4 quarters from 27 to 26 to 20 to just 10%. Growth sales also below last quarter. We'll see how this ends up playing out, but let's take a look at some of the names that were broken that were up big today, and a lot of these are AI data center related names. So VST is an electric utility up 15% on the day, but this is a broken chart. This is a former leader with an AI data center revenue stream that's pretty big. Still closed up 15% on the day, but from a completely broken chart. VST, next up CEG, uh, alternative energy gapped up. There was some favorable regulatory rulings related to nuclear energy today, and this pumped some of the data center names as well. But again, this is a broken chart. If this was up 12.51% and it was starting from up here, viable today, but it's not. It's we don't pick bottoms. This was in a protracted downtrend, severely oversold, and for now, all it did is bounce. We need to see um, if this is going to be a winner again. It needs to form out the right side of the base, maybe put in a handle before blasting higher. But this is the type of stuff that we're seeing today. MOD, building and AC products up 19%. They're an AI data center heating specialist as well that got taken to the woodshed about a week ago when it broke down, but they reported earnings. Not wonderful sales growth, but pretty good earnings growth, and broke to near recent highs. VRT completely has fallen apart, bounced 7.8% today. So these are the types of numbers that data center names, which are mostly broken down, put up on a day like today. But all it is just beginning to repair weak charts. There are a few exceptions, like ANET has had a harsh pullback, but reported earnings recovering its 50 and its 21-day moving averages. So this one is very clearly in our top 10 right now. It's got the AI data center component held up pretty well. And on the Meta after hours, it's up another 2%. So this one goes near the top of the list, along with um, let's see what we have in the 21 over 21 list that had the best of the day today, as well as the worst. So we'll start with something that recently reported earnings but is having follow through strength. Sprouts Farmers Market, breakout inside day, but hanging right around that 100 level. IoT, tried to break out of the cup and handle, but still up 3.6%, didn't quite get there. CRS, a steel stock today. Palantir is the other big AI software name that we're keeping an eye on. Tight range here, earnings next week. On the downside today, Lantheus reported earnings, and the big move up that it had on reimbursements. It initially had a huge gap down, but held right at the 50-day moving average and bounced up into the 21-day moving average. So is this stock broken now? Well, it didn't break the 50-day moving average. This obviously isn't ideal. And I don't know if the guidance was sufficient enough for us to stay interested in it, but I will be looking into that. So those are a few charts. Let's take a look quickly at the big reporters tomorrow, Apple and Amazon. Here's Apple, back above the 21-day. This held up very well, relatively speaking, as part of the big eight. And earnings tomorrow, see if it can see what it'll do. We really don't know. Broke a downtrend line today, back above the 21-day. But again, it was a big tech day today. That's Apple and Amazon. Struggled at the 200 level where Bezos had a sell order in, but it did get up right into the 50 and 21-day moving averages today. They will see, they had a decent day today, again, based on what Microsoft said, because they're both in the cloud storage business, cloud hosting business, and those two will be a big focus after hours for us tomorrow. That's going to wrap it. As always, like to hear from you. My email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. And as always, it's not how much you make in the market, it's how much of that you can keep. We've been pulling back lately as the market pulls back. That's what we do with exposure. The best, healthiest markets happen when leaders are working and the indexes are trending above their uptrending 21-day moving average. Today is day one, getting back above the 21-day moving average. So we're headed in the right direction there. We've got to see if the bulls can follow through to the upside. And if you're interested in learning more about this approach, reach out to us. And with that, I will wrap it for month-end video in Wednesday, July 31st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.